Good morning, everyone. Hope you can hear me okay. Just some interesting stuff going on. Just respecting the debate results and the poll results. So, not pro anybody. So, just to let you know that, but you have to be realistic. So, let me go. I'm dual broadcasting the Essentials room. Give me a second. So, good morning, Essentials Room. Just to let you know, access to the Essentials Room, you get the other rooms that you subscribe to, and that's for trading. So just to let you know, I'm dual broadcasting with YouTube Live. And what's this about? What this is about is the results of the debate. So I don't care pro Biden, pro Trump. I don't care about any of that. I care about how it affects the market. And it's been fascinating in the Chart Patterns Mastery chat. We've had a lot of ideas both ways. So let me show you what we're talking about. So number one, Trump wants to privatize Fannie Mae. So Fannie Mae right now, all their profits go to the government. So what happened? Stocks up 9%. That was a great idea by somebody on our chat. Now, the thing about this, if you ever want to go and try to game the system, go into predict it. And you can see a chart. So just keep that in mind. You can see a chart of the 2024 predicted election, election. And keep in mind that the more that Trump gets favored, the higher this goes. So a lot of this has already been factored in, but pretty cool though. It was still 8%. 8% is 8%. So keep that in mind. Number two in here is Trump is more anti-pot, let's say. So give me 1 second. So the way I'm looking at this is just go into charting. Believe it or not, you can go and chart. And it works pretty well. So just keep that in mind in there. So that's number one is Fannie Mae. So just keep that in mind. Now, the next thing you might want to know is how about like charting of that? And I'm just telling you, in the past month, if you go over this, you're going to see that, well, you'll see. So it just, it's the trend. It's always the trend that matters, but it helped with Fannie Mae. So Trump is less progressive toward pot. So what happened? The pot stocks got nailed this morning. So just, they've been nailed even though the decriminalization thing is up for review. But it's fascinating how that works. Now, just to let you know, when you look at that kind of stuff, just keep in mind a couple of things. So number one, when things sell off, they have a habit of selling off to their support, which is what MSOS did. GTBIF, that's the pot stock we like trading the most. We talked about it going to the 12 support. So I bought all the 20 shares here. I'm going to be gone for 3 days. I don't want to be in a lot, but that's where the support was. Now, if you're saying, well, why didn't we buy down there? You didn't have a defined pattern. We like to combine fundamental defined pattern. Anybody that tells you it's only about charting, bunk. I've done this longer than anybody, 43 years, combined fundamental stuff. So you got that. You got the pot stock selling off because of that. We sold MSOS a big position yesterday up here, as I didn't want to be in for the debates. So I don't like being in things for events. So just keep that in mind. So what else is going on? Well, what is Trump really pro for combined to Biden? Well, guess what? Oil, and guess what First Solar's doing? That's getting nailed. So guess what? When the polls started switching, look how Fannie Mae went up on a 4-hour chart. And look what First Solar did on a 4-hour chart. That's not a coincidence. That's an amazing stat right there for you. Fannie Mae went up, First Solar went down, combining sort of platforms and trends. So when some of the polls flip-flopped, this got nailed, this went up. So, well, a lot more is a point of contention, but I'll give you a good one. So, yeah, a couple of days ago, everybody worried why the long bond got nailed. Guess what? Same thing. Yeah, the polls switched. So Trump's policies theoretically are inflationary. Lower tax rates mean more tariffs, mean inflation, or it means a higher deficit. So that's why this went down. And that's why it went down today. So it's not because of the PCE. So just keep that in mind, that its policies do matter, especially if you can combine it with charts. So I hope everybody could see where the resistance is in the bonds. Right there. There's your resistance on a 4-hour chart. Then you combine it with some other chart criteria. There's your chart criteria. That's not perfect. It's here. But the point is, those type of policies do matter. So just keep that in mind. One reason I think that's why the bonds are muted. Bonds are muted. Now, this is the next thing. The biotechs. So they're acting like dirt. So you would think the Russell would go up just because of like a sort of that going up if the chips go down. Now, I'm not sure of Trump's policies on, Medicare and drug reform and all that. I'm not sure what's actually out there. So this is like a non-event. Okay, how about war? That is still a debate, and that's why Northrop's doing nothing. So at first, everybody's like, oh, he's going to go to war with people. No, that's a non-event, and sure enough, it's acted like a non-event. There are certain things that are moving a lot more on policy than others. The bond market, Fannie Mae, and the pot stocks. Everything else, well, I don't see it. I don't see it. I will tell you that, you can say all you want about pro-business, all that. I'm just showing you 3 things that really worked. Now, there's another thing that's going to work. Believe it or not, and this stuff has worked. So Trump is much less antitrust. So this is going on policies that are all over multiple news sources. What's that mean to me? Means more takeovers. That's why you're seeing like HubSpot going up. That's why you're seeing MongoDB going up. To me, all takeover rumors. So, and let me just show you why. So already in the news, there's multiple reports that 3 different companies, biggies, like a Microsoft, Amazon, and Google, interested in buying out HubSpot. If you're a CFO and you want to diversify and you're not idiots like Apple that all they do is buy back stock, you take your high price stock and you buy a HubSpot. It's a brilliant idea of Microsoft, Google, and Amazon, no doubt about it. On the other hand, HubSpot's underperformed. But let's say there's a takeover. And let's say, I'm not saying it is, but let's just say there is. Usually takes 6 months to a year for it to clear antitrust. Who's going to be president next year? Well, this is going up in anticipation of what could happen with Republicans in charge. So that in mind. The other thing, combine it with the stock looked like dirt 2 days ago. Luckily, in multiple rooms, I showed the arrow. That is a bull flag. Stock looked like dirt. This is what we mean by turning. Now, I know you'd say it's when the stock stops going down. It's when it starts to flatten, it forms this. We call this a Stewie pattern. I'll actually put it on Trading View for you. A Stewie pattern basically is an inverse head and shoulders, but it's also that something stopped going down, which means if you're wrong, you're going to lose less being wrong. That's all it means. You're going to lose less being wrong. That's it. No more, no less. So this is how I look at it. If you buy, and we use this ATR trailing stop a lot, if you buy on the way down, if you're wrong, you're going to lose fast. If you buy when it forms this is what we mean by a Stewie pattern. There. And if you highlight that and you're a little creative, looks like Stewie from Family Guy. The key is the turn and then the bull flag. And the stock has gone up a ton, 30 points since then. So the moral of the story, you don't buy on the way down, you buy when it rallies and consolidates. Now, if you think that's a one-off, take this on a 4-hour chart, not a 2-minute chart, a 4-hour chart. This one was different. The key is similar patterns lead to similar results. There's your inverse head and shoulders. Look at that. It works. You also, that ATR trailing stop helps. So that's why I use it. So you got this. I know this is a broken record, but it works. So you're looking for that consolidation after the sell-off and then the break. If you magnify that and you go to a 1-minute chart or a 5-minute, you can go to a 5. You see the inverse head and shoulders right here. You see the break. That's why we bought calls there. Why did we sell them up here? Number one, you had an event. You had the debate. Number two, you had big old resistance. Look at that resistance. Prior bottoms become resistance. Prior tops are resistance. So resistance isn't an exact place. It's a zone. Which brings me to the next thing. One of the dumbest things I hear is about demand zones. Now, not just demand zones per se. It's demand zones of buying on the way down. I've done this 43 years. I've watched more people bust out by buying a demand zone instead of waiting for the turn and the consolidation. I just can't stress that enough. Buying at the turn and consolidation. So you saw it in HubSpot, you saw it in MSOS. How about GTBIF? This is 26% of the MSOS. Oh, there you go. There's your break. So I'm just telling you, it doesn't mean you're going to make money, but it means that if you're stopped out, you're going to lose less because it goes down slower. That's all it means. No more, no less. Just goes down slower. So just keep that in mind. That's the way I'm looking at this. So in here. So that's how I look at it. Now, what's this mean for the broad market? Well, historically, I know you have everybody on the internet that, talks about, oh, the market goes up July 1st, 2nd, and 3rd. So I'll be gone those days. But let me just show you a stat. So every Sunday night, I'm not sure about this Sunday, I'm going to be at Disney Universal or Universal Orlando, however you want to say it. But I'll show you anyway. Here is a table of the average return since 1950. The biggest mistake I see are these jokers that show it from 2010. 2010, the market's gone up. I mean, overall, 1950, all around the place. So that's a nice sampling right there, 74 years. So you look in July. How about the first 3 days of July? Heck yeah, look at that. It's pretty good. How about the end of June? Not so good. It's just a non-event. Non-event. That's why we do neutral things on a day like this. Rest of July, nothing. All these people saying it's going up. I wouldn't say that's going up. August and September, not good. But now let's take into a presidential candidate election. Now, keep in mind, I sort of make this as a grain of salt. And the reason is you see August and September pretty pathetic because you don't know who's winning. So, it makes a big difference of who's winning. If it's somebody incredibly pro-business, then you're going to have almost all of these up. But overall, July, August, September, sort of blah. July is very slow. This is when I'm taking vacations, and I hardly am ever gone. So I had a knee replacement, supposed to be on a walker for 2 weeks, a cane for 4 weeks. I was back at work after a day. So, and no assistant. So I'm really into trading and to take care of my subscribers. So just keep that in mind. But I thought I'd show you that. So when you go back to this, yeah, darn right, you go up the beginning of July. But that doesn't mean today. So, and I would just combine it with charts. Now, like I said, you might be like, well, how does the bond market act with presidential stuff? It's a good question. I haven't really looked because, now we have gigantic deficits. So you can go into here. So there you go. Who's ahead? I wouldn't know if that's that great. So give me 1 second. Let me see something. Yeah, so he started here. So he won in here. Nothing. Just nothing. All I know is what he's talking about. Remember, now we have gigantic deficits. So you put yourself in a pickle. A lot of this led by the Fed. So what do I mean? Well, this is the first time I can remember, the first time that I can remember running up the deficits in a strong economy. It's stupid. What happens if the economy weakens? What are you going to do? Are you going to make more deficits, which will make the bond market go down, which will make the economy even worse because nobody can afford anything? So they've put themselves in a pickle being greedy. Now, I'm not sure it's the Fed, the administration. All I know is in a strong economy, you should not be increasing deficits. That's just general economic theory. Why? Because the Treasury has to then sell bonds to pay for the deficit. That's why this has happened. I've been warning about this. This is since I started in the business. The bond market, what? Is finally out of a 40-year bull market. Well, really 1980 to 10. So 40 years. So I probably added wrong. 30 years. Yeah, Yeah, no, 40 years. What that mean to me? It means every rally is to be sold. That's what happens with big deficits. They have to sell bonds. I mean, whether you believe me or not, you can be pro-Trump, pro-Biden, pro-Bernie Sanders. By the way, I just got my head shaved yesterday because I'm going to Universal. And last time somebody asked me if I was Larry David or Bernie Sanders. So this time I went, screw it. So that's why I got my head shaved. Now I hope they ask if I'm like, Vin Diesel, something like that. But getting back to it in here, this is the way I look at it. Bond market, high deficits lead to a sell-off of the bond market. Now, that doesn't mean the ES is going down, which it hasn't, but because this pro deficits is good, juices the market. I'm just telling you what the bonds, why they're doing what they're doing, at least in my theory. Does that mean markets are going down? No, not necessarily. So just want to show you that. So the other thing, talking about fundamental. Now, I'm not saying this works every time. I'm not saying it works every time, okay? I'm just saying that. So let me see if I can find it. So basically, Goldman Sachs said there's 50 billion stock to sell today, end of the month. So usually I do this. If you didn't know, and I like little tidbits like this. I like little tidbits by this. Go into Google Alerts. I mean, that's what I do. I'll go to that or I'll go to Twitter Alerts. Google Alerts. Yeah, you got me. End of month rebalancing. JP Morgan collar. S&P rebalance. Month end rebalance. I try all kinds of words. So watch this month end rebalance. You go to edit. At most once a day, that's not what I want. As it happens, and I want all the results, it'll spam my Gmail. But watch what happens. Let me see if I can find it. As you see, you get a lot of them. There. Now, most of them are stupid. I'm not saying I like zero hedge, but I'm just telling you. See that? It was JP Morgan. What I'll do is, because I don't want to pay for the article, I like free, is I'll just highlight it, copy, paste, and you find it. So all three of these are premium. Believe it or not, you can go into here. Let's see if it works. I don't know where it is in here. Let's see. But that's the theory. That's the theory. That done here you go. Let me copy and paste that. And that does not mean this is going to happen. They've said that stuff before, like they've cried wolf before, but I thought you'd want to see this. There, just in case. Just in case. Now, you might say, well, why would you think it wouldn't work? Because they've said that a lot of months. So I'm just going on a news story. All I know is the ES went from 55.85 to 55.58. So they are acting that way. Now, next thing, like I said, combine fundamental with charts. So I just can't stress fundamental doesn't mean anything all the time. But I'm telling you, if you have a CPI come out, there is no way that I'm having something the night before. If you have a debate coming and you sort of know, Biden's sort of up there in age and he could lose. I'm not saying he was going to. Then you don't go long pot stocks overnight because you do your research. So just keep that in mind. So now, what do you do at the end of the day? Well, I don't know about you, but that sure looks like it's forming a bear flag. Doesn't mean it is. But combined with what they're saying, it just, and the bonds down. As I look at the bonds a lot. So you see what I see. So you're combining things. So that's what I'm watching. Gotta watch all that. So just keep that in mind what we're watching. Now, you might, and that's just on the theory that there's some kind of rebalance. Now, keep in mind, though, that I don't have three reasons because overall the markets look okay. But I do see this, and maybe that gets invalidated. I always go on a longer term trend. The longer term trend, whether you want to admit it or not, it's still up. Now, that might not look that great until you see that. Now, if this on the right look like that down here, I'd be all over shorting the crap out of the market. Right now, it's a toss-up. So all I know is that might be a bear flag. That's what I'm looking at. Might be a bear flag. So, definitely keep that in mind. So what else am I trading? Well, number one, I'm going out of town, so I'm not going to trade a lot. Now, I'm going to Universal. So do you short Disney? Because I'm not going to Disney. I'm going to Universal. Well, that would have been an odd way to play the markets. Now, does anybody else know why Disney's down? Maybe I'm wrong, but it sure seems like there's some policies anti-Disney if things change. Am I wrong, Penn? Sure seems like that could be a bad thing. So, if you're Disney. So that's why, you can say whatever you want. Everybody can say whatever they want. It's how the stock reacts, and the stock has reacted like garbage to that. So sort of reverse engineering, you could say, you see, how about banks? Well, Trump loves banks. And JP Morgan going straight up. I'm just telling you, it's amazing on this kind of stuff. In fact, it's really hard to go put on internet Trump's policies because you have so many sites that I'm sure look just, what can I say? Well, here you go. Now you don't have to like USA Today. You could do Fox News, but this is the kind of stuff they're saying. So climate change. Yeah, that's why oil's up. Crime. Yeah, he cares about crime more. We'll look at some crime stocks. Education. He wants to close the Department of Education. Is that good for private education companies? I bet it is. Economy. Yeah, he wants to do a tax overhaul. Yeah, I told you what bonds will do. Foreign policy, tariff. So, just keep that in mind. Healthcare. I don't know about that one. You already have Walgreens getting killed. So, reproductive rights. So, all I'm doing in there is I don't care whether you agree or not. I'm caring how it affects the stocks. So you got Pfizer. Yeah, Pfizer makes some contraceptives. On the other hand, you got two aging presidents in there. Maybe Pfizer stays up. So, it's facing some stiff resistance, but yeah, Pfizer isn't the one. So, how about, like I said, defense is a non event. Education, how about DU? That's a private education. Darn right it rallied. Isn't that amazing? The polls switched last week and it went nuts. Now, before you think that that's a one off, maybe China's going up. Just keep in mind, China's gone down. That's a 3 times ETF. But the China education stock went up. So it's just fascinating how this stuff works. Now, the big question is going to be this, is what happens if Trump, I'm not saying this is going to happen, but what happens if Biden withdraws the nomination? Are you going to get an extremely, progressive person? If it is, all the stuff I show you is going to unwind. So I would keep an eye on the news. No doubt about it. ATR trailing stop is one, it's a stop loss. So in fact, let me show you 4 time frames. So here's 4 time frames. We're going to take it this way. Let's take the ES. There. So I use it as a trend short term for day trade. These are my 4 day trading things. So let's just put it this way. If I'm long ES right here, I'm out here. I like to play it like an algorithm. So when it gets under it, I'm out. I don't use the 20 except for special situations. Just keep in mind, 9 EMA, 20 SMA, 50 SMA, 200 SMA. That's what funds use. Why do I even show this? I'll show you why. Because I use an average true range of 9 and 2.9. 9 periods, 2.9 multiplier. If this goes down too fast, then the ATR widens, which means the ATR trailing stop widens. It means I better use something else for my stop. Now, in answer to your question about the ATR trailing stop as a stop loss, I can't tell you how many times that I've seen this where it crosses and it gets annihilated. It's so far from the ATR trailing stop, I just cover. So, just keep that in mind. Now, that's one reason it's forming a bear flag. If it's going to have another move down, you got to work off a MACD. If you're using ATR trailing stop, I'd use a MACD also. So just keep that in mind. In these rooms, I can't share proprietary stuff, but just go use a MACD and use the ATR trailing stop. That's what I do. MACD, ATR trailing stop. You can use a stochastic. In fact, let's do this because a lot of people ask. So we're going to go into trading view. We're going to take that. That's a 5-minute chart of the ES. Because I just want to show you a lot of people get this wrong. So the ATR trailing stop, because it's been working for 40 years. That's why I use it. So if it ain't broke, don't fix it. That's the way I look at it. If something else works for you, use it. So, I mess around with it all the time. Don't get me wrong, but it just seems like it works pretty well. So ATR trailing stop on a 5-minute. So you see, it sure looks like a bear flag to me. But now let's go take a 20. So here's a 20 moving average. I'll take off the ATR trailing stop. This is just to show you there's a 20. Simple moving average. And here's the 20 exponential. That's what I mean. Don't get caught up in this stuff. Just don't get caught up on exponential, simple. They're all close enough. So, like I said, I'll only use them if it gets too far from the ATR trailing stop. So, I don't even use the squeeze. So, just to let you know. So, if it works for you, great. I'll use a squeeze to find consolidation patterns. That's all. So, almost every consolidation pattern is a contraction in volatility. That's how I scan for them. So, squeeze is fine for that. But I mean, I just can't tell you how many times you need to combine it with other things. There isn't a magic bullet. So that's number one. Number two in here is on the bottom. I'm using a 31016 MACD. So you see right here on how on a 5-minute it got oversold. That doesn't mean it can't go lower, but it usually means it needs to work off that oversold until the next leg down. It's a 5-minute. But if you're not comfortable with the MACD, check this out. We're going to put stochastic. Now, there are 8 million stochastics. I know that. So we're just going to take a normal stochastic. There. That's oversold too. Doesn't react as fast. So you got to manipulate these. So how about an RSI? All I'm telling you is don't get caught up with one moving average or one anything. I would just take the oversold. When it's oversold, the probability is it's not going to work as well. You can have a fast stochastic, slow stochastic, all that stuff. But the whole idea is you're trying to combine it with all of this. Oh, the ES selling off. Who told you that? Bear flag is a bear flag. So it had to work off that oversold MACD. Did it work it off by going to a new high? No. It worked it off by forming a bear flag. Lots of times when it's first oversold, it's all on how it works it off. I don't like the stochastic. So comp RSI was a friend of mine's indicator. He passed away. So really, really good technician. But you see, very similar. Very similar. The more of the story, when it's oversold, I'm not shorting into it. I'm seeing how it works off the oversold condition. So, and let me just tell you, Brad, don't poo-poo that any indicator whatsoever. But I'll show you this on how I'm using it. So I'm going to go into here and I'm going to put 4 squeezes. I'm hoping I still have it. 6 squeezes, sorry. With 6 squib with 4 squeezes. So, and I want to show you this. So let's just take a 5-minute. How about a 2-minute? Yeah. So there's a squeeze on a 2-minute if you're day trading. So does that mean to automatically short it? No. But if I'm scanning, I might scan every single future and look for a squeeze. And like I said, do not think I'm poo-pooing any kind of indicator. I use them all. There's a 2-minute squeeze. There's a 5-minute squeeze. Sometimes I combine them because one might pop up and not the other. And that way I try to find bear flags or bull flags. So there's your bear flag. Well, that sort of worked. So more of the story, you don't go and buy here when it's oversold and won't rally. So far, so good. So now, where does that project? That's what everybody wants to know. So where does that project? So all I do then, it's a measure, it's a consolidation pattern. So let's go see. So we're going to take this on you can take off everything. So where does that bear flag project to? Well, it's a measuring objective. So it's the prior move. So let's just go put the prior move in there. $27 points. So then you take this. That would be ugly. So let's not take 27. Let's take where it started selling off. There, 20. Then we're going to project that 20 from the break. Where does that get you? There you go. 1540. Heck, it's only 10 points away. But when you're measuring, be sure that it's not hitting support. So a bull flag, a bear flag, not only oversold, but it was at support. See the multiple layers? There. So if I don't give you a trade because I'm not going to put it in the essentials room, just keep in mind that go do your own thing. Short it there. Go and do a futures account. I don't have to tell you what to do. The most successful on our site are the ones that run with the ideas. Just keep that in mind. Run with the ideas. So where does that take you? Well, that's the next thing you're going to want to know. Where are the objectives? Well, I already know it broke. So where could it go? Well, the first step, it blew through. Remember, this area right there was a support zone. It broke it. Where's the next support zone? I'm just taking prior bottoms. Just coincidentally, that's the measuring objective. So to me, you're talking about here. It's a zone still. Keep in mind, it's a zone, not an exact price. Right there. There. So prior, right in here, all those prior tops, prior bottoms, you could take it all the way here. I'm telling you, price support and resistance is key, but combine it with other things. The bond's down 30, you had a bear flag. And so if anybody says, oh, this is a support zone, watch the bear flag. You see a support zone, wait for the turn and the consolidation. That's all I'm saying. So right now, that looks in play about 55.35. So, keep that in mind. And all I'm doing is taking that bear flag. I know that's a lot of lines, but bear flag is a bear flag, and I called it for you right when I was on. And like I said, the most successful on our side are the ones that are with the ideas. So, like I said, another thing when you're learning stuff, number one, just keep in mind you can go short one share of the SPY. It's free commission. There. It's not a lot, but it's 80 cents. So now on non-futures, just cash. Let's go into it and look at the support and resistance. So you see the bear flag a mile away. Luckily, I posted it. Just to let you know, I did a class on charts, on chart identifiable consolidation patterns. So just keep in mind, sure, markets in the long run go up, but you better know how to play the other side of the market. So where could it go? Well, here's another thing, and Penn's really good about this. Gaps. You do not have to fill gaps. But if something's on the way down, the path of least support is right there. That's all it means. Doesn't mean you have to fill it. I've seen gaps go on for years and years and years. So just keep that in mind. But when you have a bear flag and you have lack of support until here, and that's your objective, well, now you got a lot of reason to stay short if you're short. So a lot of times on the way down, it'll fill the gap and overshoot. So it'll go to that zone. So Penn on our chart patterns mastery / essentials, how did that work? And Max, how did that work? Oh, look at it go. That's a real surprise, isn't it? So, and keep in mind, on the way down, a lot of times it overshoots. So just keep that in mind. Like I said, if you're a futures trader, you're all over shorting on the break. Shorting on the break. So that's what happened. And also, bonds down. And don't get me wrong about whether it's Trump, Biden, it's the uncertainty. That's why we were shorting in the first place. But if you didn't believe me about uncertainty, then you short here. So that's 14 points. So you can argue all you want and say that's a bull flag. The second it broke, that told you different. The bear flag told you to short. If you were bullish, same thing. You got to wait for the break. On the upside, so right now, it looks to me like here. So non-cash can be really important because it shows you where the gaps are. You can take SPY, SPX, either. And you got to respect that right there. Right there. So who is the brilliant person, the essentials, that just said 54.77? I'm wondering who that was. That was Penn, by the way. 54.61, right there. Miss Genius. Doubt. So your first objective is this. Let's take off the futures. We'll put in the SPX. There you go. Guess where that is? 54.77. Right there. Nice one. Now, that doesn't mean it's going to stop there, but that's your area. Now, let me just tell you, if you're short up here and you've made that much near some support, I mean, it filled the gap. You buy back at least half here. You know, if you want to let more run, sure. But if you see that, you better go to a 1 minute chart. And when you see a 1, you see it's sort of filled. So you get out of half. I mean, you just don't stay in it all. It's all money management. But right now, that whole thing about 50 billion to sell is sure acting that way. So that's how I look at it. But like I said, run with your own ideas, and run with your ideas, but let me sort of help on the direction. So that's not bad. Now, without even looking, what I'm going to do now is I'm going to look at when this was up here. When this was up here, what was refusing to go up in the first place? So one of them, everybody loves Tesla, but Tesla hit resistance, has big open interest at 200. Oh, there you go. Max, great call. So everybody that bought Tesla on the breakout, where's the resistance? Right where it stopped. That's a high risk time to be buying it. Overbought at resistance. Number two, if you're going to short Tesla, not only bear flags, but look for multiple points of contact. 1, 2, 3. Just like the inverse head and shoulders to look for longs. Once it broke, you got the bear flags. All right, what else didn't go up when the markets made new highs? Well, I don't have to even look. I bet NVIDIA's in here. Yep. All you're doing in here is this. You're taking your theories. Now, I'm not saying like I said, you filled the gap in the S&P. But the theory is this. You take the NVIDIA on, let's say, the right. I like putting on the right. Then on the left, you're going to put the ES. So you see, 10 o'clock, this made a new high. Here it tried to make a new high. 1048. Look at the bottom. Look where this was at 1048. It was already here. So the theory is if this breaks that, this is going lower. And you could see it with the stocks we watch. So you see the bear flag now a mile away. So Apple refused to go up. I don't know why everybody loves Apple when it has a bear flag. And you can love Apple all you want. You can love Apple all you want. But all I know is that when I go to a 1 minute chart, because it's expiration day, remember, to me, 0 DTE is also Fridays. That's a bear flag. Then this has a bear flag within a bigger top. So pretty cool. I just wanted to show you that those things. So just keep that in mind. Like I said, essentials, I can't post the grid. So that's proprietary. You'll have to be in a paid room. I'm sorry. Just can't do it. So getting back to it though, when you see that and you see the lack of rally on the opening, you just can't stay in it. This opened up, this opened up. This stayed up near here, and this formed a bear flag. So there's another top. Why on earth am I buying on the way down? So just keep that in mind. Apple, where are those calls? Where are the 2.5 calls? Oh, they're $1.35. So keep in mind, 1 minute ago, they were still $1.35. So just keep that in the back of your mind in here. And if you ever want to know where they are, just go and look at time and sales. Go and look at time and sales. So that's what we are watching. So you hit support. So great, you hit support. So we hit the first line of support. Just keep that in mind. And that's why you buy back half. If you want to buy back all on a day like this, look at that right there. There's your gap right there. And that's where it stopped. Like I said, that doesn't mean you have to stay short whatsoever. In fact, if you're doing a 1 minute chart on, let's say, the SPX, you see it fill in the gap. It's a gap edge. It's an area. Just keep that in mind. It's an area. So you get out of half, just like I told you. That's when you use the ATR trailing stop. Right in there. So you might not get the bottom, but like I said, when it's at the edge, you get out of half. That's what I was telling you. So Amazon, no idea. Just to let you know, no idea. I'm going to be out of town, but I will tell you that just in the grand scheme of things, it's overbought. It is a breakout, but it's overbought. I want to see how it works off the overbought condition. Also, keep in mind, everybody and their mother's long it. So, but yeah, they might mark it up on the close and overanalyze it, but that's the way I look at it. So everybody take care. Have a great week. I'll be back next Friday. I think I'm in the essentials room. So take care, and I'll